Hello and welcome to On the Record with me, Shereen Bhan. We're here at the Kotak Mahindra Bank headquarters in Mumbai, and it is my pleasure to welcome on the program Ashok Vaswani, a career banker with over 3 decades of experience, but never in India. From Citigroup to Barclays to an AI fintech company before he actually headed back home to Kotak Mahindra Bank as MD and CEO. Mr. Vaswani, thanks very much for joining us here on CNBC-TV18. An absolute pleasure. And as I pointed out, in many ways, a homecoming for you. Sydenham College is where you sort of found your feet before you headed out of India. But what is it like to be back here running a bank?
Shereen, welcome to our headquarters. Very excited. It's really nice to be back home, and it's even more fun being at Kotak. It's such an incredible platform, such a great brand, and there's so much more we can do, to really become a powerful force in the country.
But what has been the easiest part of making this transition? What has been the hardest part of making this transition? I'd also ask you this in the context of the fact that you're walking into some very large shoes that have been around at Kotak Mahindra Bank for over 2 decades, running and steering the ship here. And you also saw the departure of other senior bankers from Kotak, Shereen Bhan, Deepak Gupta, and of course Mr. Manian. What has that transition meant, and has stability returned?
So, I think the biggest challenge really has been stepping into the shoes of Mr. Kotak. He's built this from zero, literally from zero, and what he has done is incredible, absolutely amazing. So I would say, getting your arms around the place, getting used to it, takes a bit of time, but I feel very, very good as I sit here. Coming home has obviously been the easiest part. It's nice to get, regular good Indian food and stuff like that every single day. As far as the team is concerned, Shereen, some of these were always planned. The fact that Deepak was going to be around till 31st was planned. Jaimin's retirement was planned. Manian was a different kind of story. But, Kotak has a very deep bench, a very good bench, a tenured management team, and we're kind of moving along. I don't think we skipped a beat.
Well, speaking of moving along, let me ask you, you've spent 9 months here now at the bank, and you've articulated very clearly the 4 priority areas. You call them the 4 C's. How much progress have you made on each of those, and where do things currently stand, especially as far as the company is concerned?
Yeah. So, Shereen, the way we kind of talk about it is what is winning. And when you say what is winning, the first thing you've got to say is winning with whom. And I've said they've got 4 stakeholders for whom or against which we are winning. The first one, of course, being the customer. I think there's nothing more important than the customer. If you get it right by the customer, everything else falls into place. If you get it wrong by the customer, everything else goes away. My focus, my time, my energy is focused on getting it right by the customer. Frankly, we get it right by the customer, the company will fall into place. And if you're going to give the tools and everything to your colleagues, they will find it a much nicer place to work and will do it right by the customer. And finally, the community, which is really, in a broad sense, the regulator and, of course, the brand. So this is how we measure winning. And this is not like a sprint. It's not a 100-meter race. This is about the long term, right? How we're going to continuously demonstrate quarter after quarter, year after year, how we are winning against these 4 constituencies.
Let me address that constituency that you just spoke of, which is, of course, one of the most crucial constituencies, which is the regulator. And I think that is the big overhang today as far as the Kotak Mahindra Bank story is concerned, with the RBI imposing restrictions on account of deficiencies in the digital and IT infrastructure, not allowing you to onboard mobile as well as digital customers, as well as putting restrictions on your credit card business. Now, if you can share with us details on what you've been specifically able to do to demonstrate to the Reserve Bank that you are adequately or appropriately addressing those deficiencies, and where do you believe that you stand? I mean, there is, of course, an external audit that's also been sought, but where do you believe you stand in the remedial measures?
So, Shereen, first things to start, where we started with is, look, India has the best digital public infrastructure compared to any other place in the world. I've worked in every other place in the world. I've never seen anything like this, right? Now, obviously, that has led to the demand for digital services having gone up dramatically. And it's about the bank systems having to keep up pace with that. So we've been spending the last couple of months really focused on how we grow and make our systems foolproof. And like in every crisis, there's an opportunity. So we've taken this as an opportunity to really say how we'll really leapfrog and make our systems really resilient and relevant for the days to come. So I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI, sometimes even every week, updating them, getting their guidance, making sure we're on the right path. And I think we've made tremendous amounts of progress, and we'll continue to do it. You know, obviously the RBI is exceedingly important, but the customer, I've got to get it right by the customer.
Yeah.
I got to stay resilient for the customer. I need the best customer experience for the customer. And, you know, yeah, RBI has told me you got to do it.
So, and I understand that some of this is confidential, some of this is of course up to the regulator to speak about as well. But from your perspective, and you said that you're engaging with the RBI sometimes even on a weekly basis, you know, again, for the benefit of our viewers who are watching, what are the steps? If you can give us some specifics, the steps that you have taken, what has that meant in terms of incremental investments, for instance, as well? What has that meant in terms of big changes on the IT infrastructure side to address some of the deficiencies that have been pointed out? And whether there's been an acknowledgement by the Reserve Bank in any form or fashion, formally or informally, on any of those measures?
So, Shreya, actually the process started about 2 years ago when we started ramping up our investments in technology. And we spend roughly 10% of our entire OPEX on technology. So that adds up to a very significant sum. And we've been kind of growing that to about 11%. Since the order, we've doubled up on resources. We've used, you know, consultants and stuff like that. And we also, I think, went on record to say that the cost of the order would be something to the extent of about 450 crores on an annualized basis. And pretty much that number seems to be correct even now. But like I said, we've made tremendous amounts of progress. If you look at downtimes, they're down significantly. Customer experience has improved quite significantly. And when we come out of the gate, I think we'll come out of the gate exceedingly strong, both in terms of new products, but new customer experiences, much higher level of resilience, and really deliver great products and services for our customers.
You know, you talked about coming out of the gate and feeling that when you do, you will be much stronger. But is there any indication on how long it will take for you to be able to get yourself to come out of the gate, so to speak?
So that's not entirely within my control, obviously. But every single day, we're getting a little better, a little better, a little better. So the more time I have, the better the product and service when I do come out of the gate. And, you know, the RBI actually...
But surely you wouldn't want more time, you'd want less time,
absolutely, right? Absolutely. But all I'm trying to say is that we're utilizing the time well. And when we get there, we'll be out very, very strong.
You know, and you're right in pointing out that it is not up to you to decide when the restrictions will be lifted. It's up to the Reserve Bank. But is there any indication on the Grant Thornton audit and when we could expect that?
So GT started work, Grant Thornton Bharat started work pretty much immediately after we appointed them. They've done, you know, they've kept pace, they've added resources to make sure that they kind of keep pace. And it's not like a one bang kind of, you know, they'll issue one kind of report. We keep the RBI updated of the work they've done as well. So all of it is in work in progress and moving smoothly and nicely.
Okay. You know, I also want to understand from you what the implications or the impact is likely to be as far as customer addition is concerned. You know, for instance, FY23, 8.5 million customers, 8.8 million in FY24. A lion's share comes on board via the digital route. So what is the likely impact till these restrictions are lifted? And even post the restrictions being lifted, how confident do you feel of being able to better these numbers?
So that's actually a Shereen, very, very interesting question. As you correctly said, we get a lot of our customers digitally, right? Now, what have we done since the RBI has asked us not to onboard digitally? We've changed our processes and changed it from digital only to assisted kind of journeys. where a human being assists the customer to do the journey and complete the journey. So obviously we can't do as much as we were doing digitally, but we are running at roughly 30-35% of what we were doing pre the order. Once this is lifted, I'm very confident that we'll come back stronger, because even now, while the order exists, the amount of traffic we are seeing on our websites asking for digital products, obviously we can't fulfill, but the demand still exists. So when we get out, I'm hoping we come out even stronger. And we've used this period not only to improve our technology, but for example, use it to create new journeys on the mobile app, which will allow a customer, instead of taking one product, to take 4 products. So when we come out, we should come out with a much, much stronger proposition and a far more fulfilling proposition for the customer and a profitable relationship for the bank.
Does this in any way also change your plans as far as physical expansion is concerned? And I'll ask you that in the context of what you've been able to do in terms of physical bank branches over the last 4 years. 300 plus is what is the number that I remember. Does it change the strategy at all as far as physical expansion is concerned?
So Shereen, the fact of the technology order does not change our strategy. But generally speaking, what we've said is we are at about 1,948 branches as we speak. In the next 3 to 4 years, we would like to get to about 3,250 to 3,500 branches. And that is determined by where we want our branches focused, which geographies we want them focused, and how we are going to go it out. So we'll step up the pace of branch expansion, but that's not directly linked to the technology order. That is just a business strategy issue.
Well, you know, you talked about branch expansion. Let me ask you about expansion from a different lens, and that is the M&A route. And, you know, Kotak Mahindra Bank is not shied away from big-ticket M&A. You know, we do know that you are in the race for IDBI Bank. You did submit your expression of interest. Whether that finally converts into a formal bid or not, you know, yes, no, maybe?
So, look, we've never shied away from M&A. We are not shying away from M&A even today. We look at every single opportunity that comes along, and as and when the opportunity comes along and presents ourselves, we will evaluate it.
But does it still make strategic sense, IDBI Bank specifically?
I don't think it's hot and cooking right now. So I think when the time comes and, you know, there's talk about doing something, we will definitely look at it and evaluate.
The transaction is still in, I mean, it's quite literally, from all indications from the government, it's kind of moving forward at this point in time. So does Kotak intend to take it forward or not?
When the government tells us and the RBI tells us, we'll definitely have a look at it.
Okay, let me move now to talk about the banking environment in specific and the big concern for banks on the deposit side. And I want to understand from you how you're looking at this, whether you see this more as a structural issue and how you intend to mitigate what we're seeing on the deposit side, because deposits have actually declined for you for the first time in 16 quarters, while they're still up 16% year on year, down 0.3% quarter on quarter. That's the lowest in 6 quarters. How do you see this trend moving forward?
It's not unusual for deposits to drop off in the first quarter, because you normally end March on a pretty high. At least the way I look at it, you know, there's a lot of talk in India about, oh, everybody's going to the capital markets and therefore deposits are going to drain out. Frankly, I've worked in the US, I've worked in the UK, and deposits have pretty much stayed flat as a percentage of GDP and continued to grow all over the years, right? And there, obviously the participation in the capital markets is much, much, much higher than in India. So this notion that suddenly, you know, there's going to be a complete dearth of deposits and everybody's going to invest in the capital markets,
overdone?
I think it's overdone, right? And I think that, you know, look, as long as there's an economy, as long as there's expenditure, as long as there's businesses, deposits will continue to kind of go. Is the customer becoming more sophisticated and savvy? Absolutely. And that's bound to happen, right? But I don't see this situation as suddenly deposits are going to suddenly disappear or anything like
Well,
that.
maybe not disappear, but dry up, or at least certainly be harder to get by. What is that going to mean in terms of, cost pressures, margins, as well as, maybe reframing your strategy on how you try and get them?
Shereen, my market share is 1.5 to 2%. I've got a long way.
But what is the aspiration, even as far as market share is concerned?
No, very, very clear. Look, like I said right up front, Kotak is a great brand. Kotak is a great platform. There's no reason why Kotak shouldn't be within the top 3 private sector banks. And I'm talking not only of the bank, I'm talking about our subs. Where our subs are within the top 5, why we can't be within the top 3, or just full stop, be within the top 5. Right? Growth and transforming for scale is exactly what this mandate is about.
Okay, growth transforming for scale is what your mandate is. Why do you think you're not in the top 3? Why do you think in the areas where you believe, be in the top 3 or the top 5, you're not in the top 3 or the top 5?
So, frankly, I've spent less time worrying about what's happened in the past and stuff like that. What's been dealt to me is a great platform and a great brand. Are we at our rightful position? I would say no. Our rightful position is top 3. That's where we are going.
So what is going to be the strategy to get to the top 3? What are the levers that you intend to use? What is it in your arsenal that you intend to deploy to get to top 3?
So actually we have a lot, right? If you really think about it, we have the entire range of financial products. So now it's really a matter of saying, who are the customer segments you're going to go after, and what is the proposition that you're going to go after for those customers? So who's the customer segment? What is the proposition? How are you going to do it? So we've identified the customer segments, we've identified the propositions, and then leveraging technology to really kind of get there. It's just straightforward as that.
What's the timeline?
So, frankly, it's, you usually do these plans 5 years, you take 2024, you add 5, 2029, call it 2030. So round numbers, 2030 is where we are saying we should grow market share quite significantly.
And is organic growth largely going to drive it, or do you believe that it's going to be a mix of both organic as well as inorganic growth?
It's going to be both.
It's going to be both. Of the strategy that you gave us broad direction in terms of what you intend to leverage to be able to get to that number 3 and number 5 position by 2030. Where do you believe you will need to work the hardest? And what will, is there a particular niche in the market that you're going to go after? Any specific segments that you believe that you are better placed and better positioned to address at this point in time?
So, Shereen, if you see, our private bank is very, very strong. So our offering for the high net worth, we've always been strong in that space. That goes well. I think our 811 offering is very strong for core India, and how we do that. I think we can do more with the affluent and mass affluent. And then in the corporate bank, we are very, very well positioned to kind of grow our shares there. So different challenges across the different customer segments, but generally speaking, very well positioned to kind of take off from here.
Well, that's 5 years out. Let's talk about
Starting today.
Starting today, but let's talk about a little more immediate as far as advances are concerned specifically. There's a lot of hope at this point in time about the private investment cycle picking up and really firing up. What's the sense that you get on the back of what you are seeing as far as advances are concerned?
So I think two perspectives there. Number one, private sector capex will have to pick up if the country is going to meet its objectives of growing at 7, 8, 9 kind of percent. Has it started kicking in right now? Not as much as it should. So what does it take to really get that going is something I think we need to spend time talking about, thinking about, and doing something about.
So do you believe that we're a couple of quarters away from that, or perhaps sooner from a takeoff perspective?
Yeah, it's hard to put a timeline at that. I don't think it's going to be. I mean, it'll be different by industry. It'll be different by different segments. So I don't think there is like a one switch that will be turned on. But I think there's a lot of focus on it. Generally speaking, the economy is in great shape.
But just on the back of the pulse checks that you're doing, I mean, where are you feeling most confident?
I think there are multiple areas which are kind of, infrastructure, generally good. I went to Hyderabad. I saw the pharma sector there doing amazingly well. Obviously, GCCs. I think that it is broad-based. And I think you will see it kind of come through. And let's see the speed at which it picks up.
Even as far as unsecured lending is concerned, the regulator has sort of been periodically and quite frequently addressing that as a potential cause for concern and something that the banking sector needs to be watchful of. Again, any signs there of trouble for you specifically?
So, Shereen, there are clearly areas and there are clearly segments of customers where we are seeing over leverage. I think during COVID, I think the banks became very careful and they kind of pulled back. Then suddenly realized that during COVID, things are turning out to be definitely not as bad, actually turning out to be pretty well. Of course, supported by the government and stuff like that. And I think that there was a little bit of an overextension there. And so there are segments of customers where we are seeing over leverage. It'll correct itself out over the next couple of quarters.
Okay, but what does that mean over the next couple of quarters in terms of, NPAs, in terms of the impact as far as the bank is concerned?
I think as far as credit cards I think for the industry overall, you will see some elevated losses. I think that's already starting to show up. Some of the numbers are, clearly there. I think you'll see that for a quarter or two, and then it should kind of even out. But you will see some elevation in credit losses.
And also on the exposure on the MFI side, because again, that was something that you were looking at upping. Is that, given the pain that we're now starting to see, and it's quite visible and evident, is there a reason to step back or review?
Look, we are in the business for the long term, and MFI is a business we like. We just completed the Sonata transaction. It's got us to a decent size, continue to grow. There may be a few bumps along the way, and that's obviously, par for course. But generally speaking, we're committed to the business. We'll continue to grow it. Right now, that over leverage kind of comment, I think we're seeing it in cards, and I think we're seeing it to some extent in MFI.
So outside of these two potential red flags that you've just highlighted, as well as the regulator highlighting, is there any other, any other visible signs or incipient signs of pain that you see emerging?
Not really. Like I said, the economy is doing pretty well. Capital market businesses are doing really well, as one would expect.
What do you make of what's happening as far as the markets are concerned? Given the fact that you've seen the mother of all bull markets in the US, what do you make of the way that the Indian market is behaving today?
No, actually quite incredible. Retail demand is so strong. Every month when you get 22,000 crores coming in and stuff like that, obviously provides a lot of support. And no longer are we dependent on foreign capital for this kind of thing. It's in a very strong shape, and long may it continue.
And so what does that mean then from a subsidiary perspective, and the growth plans and the growth aspiration that you have as far as subsidiaries are concerned?
See, that's why I feel so good about Kotak. And that's why I feel so strongly about Kotak, because we are literally got 4 or 5 major engines, right? We obviously have the banking engine, we have the insurance engine, we've got the capital markets business, we've got the investment bank. So we are firing on multiple engines. Even, God forbid, at a point in time, 1 or 2 engines are not firing, we still got another 3 engines which are firing very strongly. So, if you look back at, let's say, our Q1 results, you could see capital markets was doing really, really well, right? Obviously, the technology embargo put a dampener on our consumer bank, but our corporate bank was doing really, really well. So at every point in time, we are kind of continuing to soar and continuing to climb. And as we strengthen, the future, getting 4 or 5 engines firing, gets me very excited.
I would imagine. So as far as these 4 or 5 engines are concerned, where do you believe you are? I mean, are you in the first gear, second gear, third gear? Where do you believe that you find yourself across these spaces?
No, actually, if you look at it, capital markets is doing really well. The corporate bank is doing really well. Our investment bank and alternative investments is doing really, really well. The technology embargo has put some kind of pressure on the consumer bank, but otherwise, it's full steam ahead.
You said growth and transformation is the mandate. So really, as far as the consumer bank side is concerned, as and when the restrictions do lift themselves, how different do you believe your offering is likely to be? Because in a way, you said you also want more time to be able to figure out what else you could do with the customer or bring forward for the customer. How different is the approach likely to be? And are there any specific insights on the back of, you having dealt with the US as well as the UK, and especially on the credit card and the digital side, that you intend to incorporate here?
So, Shereen, for example, we are soon going to launch our new app. It is really cutting edge. I've seen stuff in the US, I've seen stuff in the UK. This is really good.
What makes it cutting edge?
Try it. When it launches, please try it.
No, but tell me, what makes it cutting edge?
Just the user experience, the speed at which it renders. We benchmark ourselves to the best tech companies in the world, and it kind of catches up to that kind of speed. The kind of user experience, the intuitiveness of it is really, really quite amazing. So we're going to go, we've already launched it in beta, very good results, very promising kind of feedback. So when we go big, that'll be like one big thing. The kind of things
and is this linked to the restrictions lifting?
No, this is already out in the marketplace, so our existing customers can get it. New customers obviously can't, but existing customers can. And, we've been testing it out, but we're going to go, obviously, full hog on it. So many such things, right? Making sure that the customer experience, just end to end, is beautiful. I think you'll see a lot of that kind of stuff happening.
Okay, well, we're going to take a break on that note and return with what else is cooking at Kotak Mahindra Bank. We're in conversation with Ashok Vaswani. We're going to take a break and be right back with you with a lot more. Welcome back. You're watching On the Record with me, Shereen Bhan, and we continue to be in conversation with Ashok Vaswani at Kotak Mahindra Bank. Mr. Vaswani, I want to go back again to the issue as far as Kasa is concerned and this chase for Kasa that everyone seems to be focused on at this point in time. I mean, how are you looking at this, and does it, at least in the near term, change the bank's strategy in any fashion?
No, in fact, we've strengthened the whole deposit strategy, and obviously Kasa plays a very important role. And frankly, if you go after a type of customer with a proposition, the customer is going to give you a bunch of money in savings and current, may put instead of TD into capital markets. So frankly, it's not a huge change from what we're doing. If anything, it's strengthening what we were always doing.
Speaking about changes, what's the outlook then as far as NIMs are concerned and as far as the net interest margin goes? Because you've actually seen margins coming down to an 8-quarter low. Is that now likely to be the steady run rate in the near future, or do you...
Yeah, I mean, that's more going to be driven by repo rates and stuff like that. And, if repo rates come down, there'll be some amount will be offset by pricing, but the others will kind of flow through. So that is more linked to that as opposed to a change in fundamental deposit strategy.
On rates itself, we've seen what the Fed has finally decided to do and move with a 50 basis point cut, which is on the higher side of what the expectation was. What are you expecting here on the back of what the Fed has done, as well as where we currently stand now on inflation?
Yeah. So if you talk to our in-house economists, they would tell you that they would expect some level of rate cuts, which kind of makes sense because I think the economy is generally speaking in a good shape. Inflation is coming down and things are going down. The RBI has always managed this economy very, very well, and I think they'll continue to do so. So you should, I think we at least in-house, have an expectation that rates will come down gradually, starting maybe December.
25 basis point
25
cut?
basis points kind of cut
is
what our economists are predicting.
Yes, with that disclaimer on the table. But as far as the economy goes, what do you find most confidence in? I mean, you were talking about various cylinders and engines that you're going to be focused on within the group. But from an overarching India story perspective, what gives you most confidence today?
Look, the economy has been growing at 6, 7, 8 kind of percent. right? And with everything that's going into it, it's reasonable to assume, unless there's something which is completely out of the blue, it's reasonable to expect that the economy continues to grow at 7.5, 8 kind of percent. And that is incredible growth. It's clearly a kind of outlier. It's clearly a bright spot amongst the world economies. That kind of economic growth obviously is great for financial services, because financial services tend to grow somewhere between 1.5 to 2 times economic growth. Positions us quite well for the future.
Well, speaking of the future, I mean, you gave us a very clear indication of the aspiration as far as where you see yourself or where you hope to see yourself over the next 5 years. But in terms of profitability and the need to do better in terms of profitability as well, to be able to fuel the kind of aspiration that you have. Again, if you could leave us with some specifics in terms of what you intend to change, if anything at all, to drive profitability.
So, Shereen, we're making a lot of changes. So starting January, first of all, reorganized to pull all of the Kotak subs together under one person to really, so the one Kotak kind of position. And the idea is to be able to actually develop those propositions tied to the customer segments that we're going after. I think we've made changes in the consumer side of the house, pretty significant changes there as well. And the whole, if there's one big theme, it's all about customer centricity. That clearly focus on the customer, what the customer wants, how we use every single part of Kotak to drive to what that customer wants.
But does anybody say anything different? I mean, you talk to any CEO and they will tell you that our strategy is to be customer-centric. So how's your customer-centric strategy going to be different from another private bank or even a large PSB?
I think there you're 100% right. And it's not about what I say. It's about the changes that we are putting together. And next time we meet, you will tell me that you are more customer-centric than you were before.
Okay, so 9 months on, what is the one thing that's pleasantly surprised you? And what is the one thing that you didn't anticipate as a problem that surprised you?
I don't think anything kind of stands out. I don't think anything stands out, Shereen. I was very excited about coming back home. And I think
that sealed the deal.
That sealed the deal for me. So
let me end by asking you, because you also did a stint with an AI fintech company, and today that's the buzzword. It's almost like this magic wand that everyone is using to drive up valuations, at least at this point in time. But the impact, especially on the banking sector, especially on jobs, I mean, what are we talking about? Are we talking about the next 5 years? Are we talking about the next 10 years? When do you see it making a real impact?
So I'm totally convinced it'll have a big impact. I'm totally convinced of that. Typically what happens is you overestimate the short term and you underestimate the long term. And I think that'll play out in the case of AI as well. Will it transform things? It will definitely transform things. I mean, think of this as on the scale of the Industrial Revolution or the Internet Revolution, quite a significant impact. It's impossible to predict exact timings, but this thing is big. I'm convinced.
It's real and it's big.
It's real, it's big, can't predict timing.
But you haven't started work on it just yet, as far as the
We started putting thoughts together, where it could apply and stuff like that. But can I showcase something to you right now? No.
On Yes Bank specifically, because again, there's a lot of speculation on what is going to happen. You've got a 1.2% stake in the bank as well. Has there been any indication from the Reserve Bank on, collectively offloading stake, or
Shereen, you talk to everybody. You should be answering that question for me.
Have you been asked for an opinion, or is there a plan that's being put in place?
I've heard whatever, frankly, is in the press. I've not been asked for my opinion on that one.
Is there a plan on what you intend to do?
Whatever the press says.
Okay, whatever the press says. So let me end then by asking, we're almost at the end of this calendar year, and as we head into the next financial year, the single biggest priority, and you can't say customer centricity.
Deliver on my plan.
Ashok Vaswani, it's been an absolute pleasure.
Thank you.
We wish you the very best of luck, and thank you very much for joining us on CNBC-TV18.
Thank you so much.
Well, with that, it is time for us to wrap up this edition of On the Record. We will take a break here and return with more on CNBC-TV18. Stay tuned.